Hey, it's Jonathan. Thanks for joining me today. I hope this video finds you in good fortune. Today we're going to look at the housing market, and we're going to continue on with our fundamental series, talking about the fundamentals and comparing that to our market cycle. These graphs right here are on our website, available for you to use. I reference them quite often, so I put them on the website, and it just gives us an indication of where we are at in the market and what we can expect to happen if we base it off of what's happened previously. So let's go over here. We're also going to use the Forex factory calendar. Um, we're going to look at. Let me close this stuff here. We're going to look at simply the housing market. I filtered it so that we're looking at the U.S. housing market. That's where I'm located. You can adjust it for your location, and we've clicked on just housing, the housing reports. All right, so the graph, if you click over here on the graph, it'll open up a graph. Excuse me. It'll also open up details here if you open up the detail panel, which gives us a brief description of the what the report is about. So what I've done is I have adjusted it from a scale from looking back from 2005, or as far back as I can go, but no further back than 2005 to the present, so we can examine the data on all the reports um, in the same time period, right? Over the same time period. Let's look at this first one though. This is construction spending. So construction spending is the change in total amount builders spent on construction projects. That's pretty much self-explanatory. You know, if you want to, this report comes from the Census Bureau. If you want to look at the report itself, you can always click right here, and it'll break the report down even more. I'm just going to give you an overview of all the housing reports though, and get you started on this. So we can see that we actually came out higher than forecasted. Construction spending went up a little bit. We see where that went up. I like comparing present day to what we saw during the COVID, which was right there around 2020, May, June, July of 2020, and then thereafter. Also, the back here in 2007, 2008, on into 2009, where we had the housing crisis. These are the key points that I actually usually look at. But you see, construction spending did go up a little bit. Now, this could be for a couple of different reasons. It could just be because of inflation. It could also be because people are spending more on construction projects, right? So if this is because of inflation, we need to compare this against what the Fed is saying about inflation. They're trying to bring inflation down. So this would not necessarily be a good thing if it's from inflation. If it's from people just spending more on their homes, then that would probably show the people staying in their homes and investing in their homes and their properties. Uh, so let's look at this in light of the uh, other reports here. So we have mortgage delinquencies. You see, we're as low as we've ever been on the mortgage delinquencies right now. I've heard people um, compare 2007, 8, 9 to where we're at now. They're saying the housing market's going to fall off, but I think we can see that we were much higher in delinquencies. In 2007, 8, 9, what we had, the housing crisis, what happened was people were given mortgages that they could not afford, and we saw a bunch of people lose their homes. So we have the same, if comparing that to now, then we don't see delinquencies like that. You see, right after COVID, we had another spike too, where a bunch of people were losing their job. Although we've come down really nicely since the COVID incident, and so I don't anticipate at this point having a great amount of homes hitting the market because of non-payment, because of delinquencies. Although this is something that I'm going to be watching. If we start seeing this number, if we start seeing this going up, then this is a good indication that we're going to see a lot of homes hit the house. Hit the market. More homes hit the market, and and we just don't see that right now. But this is something I'm gonna keep my eye on. And going back to the construction spending, this might mean that people are staying in their homes and fixing them. And also, it could be inflated. The prices be inflated at the same time. All right, building permits. So we see that building permits are coming down. You see that we had quite a drop off, 7, 8, and 9. 9, we had a low of building permits, but you see pretty much at the same point in 2007. Let's see, there's 2008 where our building permits were, and then 2009. So we see, and this is where the market was just flooded with inventory, but we see the permits coming down. So this is the annualized number of new residential building permits issued during the previous month. So these are residential permits. So we see that there's going to be less homes, at least that the permits were applied for. Housing starts. Now, building permits, when people apply for permits, this is how many people actually, the housing starts is actually the percentage that actually started building. You see where we are in 7, 8, 9, and then we see that we're coming down. We're still up there quite a ways. You see what happened in COVID. The housing starts went way down. Okay, so this represents the annualized number of new residential buildings that begin construction during the previous month. So this is actually how many people started construction during the previous month. Okay, and then the existing home sales. We can compare it to 2007. So we had a flat line 2007, a drop off 2007, 8, and a drop off in 9. We had a real big dip there in 2010, another one during the COVID. And you see that we've come back rather nicely. In fact, we're almost down to the COVID lows. Again, we're not too far away from the COVID lows. That's existing home sales. So these are homes that are on the market, and that these are existing homes. So we see that the building permits and the housing starts have come to, are withdrawing, and then also the existing homes. So this may mean more homes in the future on the market, or better prices. So existing home sales have come down, so we might see some more homes in them. Okay, and then here's the new home sales. New home sales, 2007, 8, 9. We had we were pretty low. In the 2011s had a little spike in 2010, and you see that we're working our way back down now. We had a spike right there after COVID. So the annualized number of new single-family homes that were sold during the previous month. So in this specific case, we are talking about a single-family homes that were sold during the previous month. Okay, the HPI. This is going to be the change in mortgage prices. So this is specifically for Fannie. Well, it says here change in purchase price of homes with mortgages backed by Fannie Mae and Freddie Mac. So we can look at that. You can see that the change in price. We've had a considerable change in price, and this was a considerable spike in price. The housing market has been doing well. You see, these were our COVID lows here. So back in 2020, and you see that we're even below the COVID lows. Now we're not as low as we were back here in 2008 and 9, but we just had a considerable run up, and those are mortgages backed by Fannie Mae and Freddie Mac. The composite, this actually is a close indicator to what we just looked at, but instead of being Fannie Mae and Freddie Mac specifically, these are single-family homes in 20 metropolitan areas, and we can see our price movement in that. And this is the change in selling price of single-family homes. So you can see where we were in 2007, 8, 9, and then where we were previously. We had quite a run up, and even this is starting to drop off as well. So what this is telling us is that the price of homes are coming down, and these are things to watch if you want to get in the market. Then these are the things to watch. We have pending home sales. We have pending home sales, and this is the change in number of homes under contract to be sold, but still waiting. Okay, so these are the pending home sales. You see, COVID, we had a great drop, and after COVID, this this is what started the this last housing boom. Is everybody wanted to purchase a house because they were I think everybody was planning on probably staying in the house, so they wanted to purchase a house and fix it up, and this is where they were planning to stay. Well, we have we're getting back, we're going much lower. Back here at 2010 was a low. It was even lower than COVID, and we're headed down on that, so that's retracing nicely. And those are pretty much the housing reports that you want to look at to just give you a general sense of where you're at in the housing market. Now, again, you're going to want to look at specific data to your area, given whatever area you are. I know that the home prices have come down quite far in California, where we've only seen a little dip in the price of homes in other areas like Florida or Texas. So, but this is where you can find this information. If you're going to be in the market, you might as well, buy low and sell high, right? If you're going to purchase a home, whether it's a home that you're purchasing to live in, or if you're just purchasing it for investment purposes, you want to look at the market to find out whether you're purchasing at a good spot. You don't want to be upside down in a house. It might be a good idea if you think you're at the top of the market, if all these indicators are real high, to rent for a while and put money away, and then purchase a house when you see a retracement, which we're in right now. All right. Well, I hope this is stuff I look at. I hope that you found this useful. I hope you get something out of this information. Always compare it to where we're at in the market cycle and what the Fed's saying at any given time. And y'all are beautiful. I'll see you next time.